Alright, this is going to be the last video of the night to wrap things up. Thursday, December 8th, 2011. It's just after 3 a.m. and we've had a change in the tide here. Coming into the last video, price was pushing up fairly significantly into the resistance zone. We briefly breached that level and have reversed since. So I'm still in my short trade by the skin of my teeth, and it looks like the selling momentum that we've been talking about on the higher time frames, like the 4-hour, is starting to appear again on the lower time frames. That footprint is starting to show again. Just a quick recap on the price action that we saw leading into this. So, one thing to really take into account is the market's job. I mean, this is an analogy, obviously, but the market's job is to cause pain. 24/7 around the clock, causing the maximum amount of pain possible. So this is something that I've just seen recently. I don't know if there's any merit to it, but as this video serves more as a journal than anything else, and I'm just going to throw it out there. What I've been seeing recently is a lot of the times when the setup is too easy, and it's hard to quantify what too easy is, but after you've been watching price action for a while, you begin to see, certain price patterns become really obvious in the market, and from what I've been seeing the last few days, really just recording these videos, is that the patterns that are too obvious tend not to work. So here's a good example. Here is a classic reversal, right, forming at the top of a swing. And on the following candle, we put in the opposing reversal bar, and price takes off. Now, there's a couple things to be noted here. One, was that we did have some very strong upside momentum coming into this swing point. So that may have been one factor. The other one was on a 5-minute. We did have a clean close above the swing point, indicating a higher swing high. So, a couple of things to keep in mind there, other than just the fact that 15-minute shows a reversal. The other pattern that really shows this is this reversal right here. Came into resistance, and we saw an increase in selling pressure, so most likely profit taking. Put in a reversal. The next bar confirmed this movement, and then right after that, the following bar took out the highs and blew out all the shorts who had gotten in, thinking that we were going to reverse back down. Now, the interesting thing here is, on this bar, we took out probably a good chunk of people who had a very tight stop above it. And I was one of the people with a stop above, but I had a looser stop, so I narrowly escaped this spike to the upside. Now, as you can see, we put the exact same formation in here, inverted hammer, but the difference is the size of this candle, also that combined with the wiping out of stops above this high, and this, in my mind, was a lot more powerful than this candle by itself, because this was expected. People who were long took profits here. They got off the train or the bus, whatever you want to call it. New shorts got on, looking for a ride to the bottom of the range. Well, in fact, longs who decided not to take profit got stopped out, most likely. Shorts got in, they got wiped out. And then, the strong hands, whoever was responsible for, pushing the buy and then the sell up here, they got in at a better price, after the stops got hit, and pretty much were able to close price back within the structure. Um, as a result, you can, very quickly you can see how many people got hurt, just on this whipsaw movement. And because of that, it makes it, a lot more, um, in my opinion, it holds a lot more weight. So on the demo account, I actually go short on this trade. Obviously I'm already short on the live account, but I'm experimenting with some other brokers, trying to see how the data feed is like, different platform, using J4X, so it's an ECN broker. But anyways, the point is I took the short based on this candle and put a stop above the high of that, and the target is going to be down here. So we'll see how this progresses, and again, the momentum is picking up, which is a good thing, which is what we've been seeing on the 4 hours. So that confirms our overall theory, at least in the near term. This is still one candle, and it's still got a ways to go before it actually closes. So we'll see how it develops. The only other thing I want to touch on, well, this should be a 15-minute. This should be the hourly here. Is where'd it go? So over here on the 1 minute, what I've been doing is just keeping track of swing points, simply just highlighting them. And this is more of an exercise for me, just to keep in mind, where the stops are. When you're trading, it's important to realize where people are getting hurt, where people are exiting or being forced to liquidate, and where new buyers, sellers are getting in. So, early on we had this sort of consolidation here where we had a series of higher swing lows and lower swing highs, pretty standard wedge type pattern. Right near, pre-market on London, we had a breakout here, a pullback, put in a higher swing low, and price sort of exploded higher. Put in a couple higher swing lows, higher swing highs, and then on this one right here, the swing low would have been marked on a breach of this swing high. That didn't happen. Instead, we breached this swing low, so the swing high gets marked, and the next, what I can do is I can draw this out to make it a little bit easier to understand. So the next, let's see if we can get. I'm going to pause the video for a second. There we go. Just wanted to grab the pen here. Get this out of the way. And, that doesn't seem to be working. Anyways, what I'm trying to point out here is, if we do get, so assume that, I mean, I know it's blocked off here, but assume this is a swing point to the downside, right here. Now, this swing point will get marked if price moves up. Again, this is sort of discretionary, right? I mean, we don't have a certain number that price has to breach, but rather it's just eyeballing it, and we also get another push down. At that point, this level gets marked as a swing low, and again, we can go ahead and mark this level as swing high, on the confirmation there. So that is what is being used as a marker in some sense. anyways, that's that's pretty much what I'm looking at this point. Um, just just trying to keep track of what the market is doing, and also read the price action at the same time, try to be a better picture, and essentially make me a better trader, if nothing else. So, um, yeah, I guess on a final note, I mean, for me, the problem has really been the discipline issue. Um, I've had some really good resources over the years, been fortunate, some really good teachers as well, and quite frankly, I mean, I know my shit. The problem really is just the discipline and treating it like it's a business. And, even over the last week or two, I've seen significant improvement in my trading, just the ability to learn from my mistakes, and just just drain the emotion out of all of this. Just be able to look at it very objectively. I mean, it's one of those things where if price is going in your favor, great. If it's not going in your favor, that's fine too. As long as you can read it and you can adjust, you'll be just fine. Anyways, that's the rundown for tonight. There's still about 40 minutes left in the time that I usually trade, but I've got some stuff I need to take care of, and I need to get to bed pretty soon. So, um, again, we'll see how price reacts to this area of support. Um, it could very well turn around and bounce back up, but I do think that looking at it in terms of a risk to reward ratio, um, there's still plenty of downside that I'd be very happy to take a part in. So if we can make it down to that rising trend line, that'd be a level to maybe take some profit, and then obviously the gap fill, which we discussed earlier, um, would be even better. So, anyways, that's it for now, and thanks for watching. Good luck out there.